I want to speak about what happened this week in the market, and I like to do kind of a summary here at the beginning of the show, just talking about what I see and what's going on and what's important. This was actually a really big week in the two main areas that I think drive the stock market. Number one are earnings. If you look long term, earnings and the stock market go together. Day by day, things can happen, but the more earnings go up, the more the stock market eventually goes up also. And so that's a huge issue, and there was lots of big companies reporting earnings this week. And then the other thing that really drives the stock market is the Federal Reserve, and what they're doing and how they're anticipating what's going to happen. And they met this week and then came out on Wednesday with their comments. So first of all, on the earnings front, we had some of the biggest companies in the world: Apple and Microsoft and Facebook and Amazon and Tesla and Ford, and Google, et cetera, all reporting earnings this week. And for the most part, those earnings were pretty phenomenal. Amazon missed their numbers last night, and so the expectations were higher than what they reported, and it's down about 7.3% today as we speak right now, and the market's down a bit because of that. Otherwise, we probably would have had an up week, but for the most part, the other companies reported unbelievable earnings. So, for example, Apple reported an $81 billion worth of revenue for the second quarter of 2021. And that's unbelievable. That's a huge number. I believe it's the biggest quarterly revenue number ever reported by a company. But if you compare it to last year, which is about 60 billion, that's a huge jump in revenues on a big number. And more impressive was that their earnings per share went from 65 cents a share up to $1.30 a share. They doubled their earning in a 12-month period per share. So really, really incredible. I'll just take a minute to talk about Apple for a second, because there's a very fascinating story that goes behind this. And this here in Silicon Valley, this is the lore of Apple is unbelievable. They started in a little garage, Wozniak and Jobs, and got this thing going. But one of the parts of their creation story that is the most fascinating to me is that when they first started, there was actually three of them. There was Jobs and Wozniak and one of their friends. And the friend was kind of helping with, advice on how to incorporate and those types of things. And they decided to give him 10% of the company. And he was on his way down to file the corporate papers, to form the corporation. And he actually crossed out the 10% and crossed himself out and put it 50-50, Steve, for Jobs and Wozniak. And it turns out what had happened, he was just before that involved in another company. And because he was owner, he ended up with some liabilities, and he was a little nervous about doing that again. And so he passed up 10% of Apple, which of course had its troubles in the mid 90s and, what have you. And then Jobs came back. But this is now, going to probably be a $2 trillion company here at some point. And this is a true story. You can look it up. There's a documentary about this gentleman. He now lives in Vegas. It's just an amazing thing to me. It just blows my mind. But earnings were very good. Now the market is looking at what's going to happen ahead. So these earnings didn't have a huge impact on the market. It's really why the market is up, because of the expectations that they would hit where they were. And so they're really looking at guidance. So even Apple, with those great earnings, they actually dropped the next day after earnings, because they announced that there might be some semiconductor chip shortage, which would affect their ability to deliver iPhones. And Facebook, fantastic numbers, but their stock dropped for the last 2 days, really just because they said that it might be harder to keep that up for the second half of this year. So guidance is a big deal. I will say I wouldn't worry about that tremendously, because a lot of CEOs like to kind of bring guidance down. It makes it easier for them to beat that in the next quarter or the quarter after that. So I think things are going to be a lot better than people think as far as that goes. But then the Federal Reserve met Tuesday, Wednesday, and just the bottom line is that they talked about, uh, discontinuing or cutting back on buying bonds. They buy $120 billion worth of Treasury bonds every month. Going to cut back at the end of this year, start cutting back at the end of beginning of next year, what have you. That's the same information. They still talked about, the possibility of raising rates in 2023. So there's nothing really new there. But they did have more positive commentary about the development of the economy as a whole. That was good. And I think one of the interesting things to me was their comments about the Delta variant. And so, I look at what the Federal Reserve says a lot, because they have access to unbelievable data. And in their opinion, they don't see the Delta variant having a giant impact on the economy as a whole, mainly because the main methodology that we seem to be locking in on is masking and not shutting down the economy. I think the shutdown that we had last year didn't do as good a job of controlling the virus as just the masking did. Some businesses would be affected. If masking is mandatory or recommended or what have you, obviously restaurants and bars would have some trouble because you need to take your mask off to eat or drink. So, but those aren't well represented on the stock market. Lots of restaurants, lots of people work in restaurants, and that's what makes it important because there's so many employees with revenues. But if you look at what happens on the stock market, there aren't a lot of restaurants on the stock market, and most of the companies we just talked about, Apple and Google and Facebook and what have you, aren't really affected that greatly by what happened last year with the pandemic. So I thought that was kind of interesting as far as that goes. So really pretty good. And the other thing that happened this week was the gross domestic product was reported for the second quarter. And the only thing that's important about that is, number one, it came in at 6.5%, which is huge. That's, big number. But the expectations was that it was going to grow 8.4%. So that's kind of a big miss. And really the thing that's good about that is that the main concern is that things might get too hot. And so anything that shows a little bit of softening, like that gross domestic product, or even, a little bit slower growth in employment, those are things I think actually help the market. And more importantly, they help the Federal Reserve to delay their interest rate increases or cutting back on their bond purchases. So I think those are good things that kind of keeps things going. Obviously, if the GDP really falls apart, that's a problem. But you want that middle ground range, and that's kind of what happened this week. So I think we'll see some volatility like we have this week because earnings weeks are always volatile. But I believe that this was a really good week, and it set us up for continued motion, going forward, in my opinion. And so, we'll have to wait and see what happens. But that's what happened this week, and I look forward to, talking to you next week.